This analysis report lays out a highly bullish case for TeraWulf, or WULF, arguing it's a strong buy based on its pivot to AI, its zero carbon power advantage, and a pretty significant valuation gap.
Right. The 3 reasons WULF is a strong buy thesis.
Exactly. Let's just dive right in. The material it's very effective at establishing a clear investment thesis right away. I really like the structure. It anchors everything to these 3 big ideas: the AI pivot, the nuclear moat, and the valuation gap. It really pulls you in.
That structural clarity is key. And the core thesis itself, that synergy between cheap, clean power and all this high-demand AI compute, it's genuinely potent. It's a persuasive story.
It is.
But to really land with the most sophisticated investors, the analysis has to be more than just persuasive. It has to be robust. We have a great story here, but we need to, strengthen the architecture underneath it to convince that smart money reader this isn't just a narrative.
I see what you mean. The foundation's there, but the finish needs more rigor. So let's jump right into that first big area for enhancement, which is really about how the analysis deals with context and risk.
Absolutely.
A robust analysis requires integrating potential counterarguments and risk factors into the bullish thesis to build reader trust and analytical depth.
That's it.
So, as I understand it, the argument here is that the AI pivot offers stability. It converts that, volatile Bitcoin revenue into predictable, high-margin rent from AI companies.
And that's the right foundation. But the weakness is that the report is just completely focused on the upside. It highlights the massive fluid stack deal, the huge YOY revenue growth, the 70% upside to the price target.
All the good stuff.
All the good stuff. But it totally omits the inherent risks or the execution hurdles that come with such a massive transition. And that one-sided approach, while it sounds great, it actually weakens the credibility for a smart money analysis. They expect to see a full risk profile.
Okay, but hold on. If the whole goal of the material is to argue for a strong buy, doesn't including all these hurdles kind of dilute that conviction? Aren't we supposed to focus on the catalysts?
That's a fair question, but for a sophisticated financial audience, managing risk is the catalyst. The suggestion isn't to dwell on the risks. It's to proactively introduce and then just quickly dismiss or mitigate the 2 most obvious pitfalls.
Ah, okay.
Doing that shows a really deep consideration of the context. It strengthens the strong buy conclusion because it shows the analysis has already wrestled with the friction points and, found them manageable. The conclusion is stronger because it survived some scrutiny.
That framing makes a lot of sense. You're preempting the reader's inevitable skepticism. So, what are some concrete examples of risk mitigation we could build in?
Well, first we have to acknowledge the operational execution risk. The material talks about Bitcoin mining, but scaling a high-performing computing operation, that's a whole different ballgame.
Right.
It requires specialized talent, operational rigor, and you're competing with established data center giants. So the suggestion is to offer a brief, specific acknowledgement of that. Maybe say something like, while scaling HPC involves competition, WULF's proprietary low-cost power structure allows for highly competitive pricing, negating that barrier.
And what about the money? The financial side of a pivot that big? That can't be cheap.
Precisely. That's the second hurdle, the financial strain. The report should consider the potential for delays or, higher than expected capex from converting those power plants, Nautilus and Lake Mariner, into HPC data centers.
And then explain why they can handle it.
Exactly. Then you explained why WULF's financial position is strong enough to absorb it. You could cite recent financing, their liquidity ratios, low debt. Showing the company can navigate the capex transforms the report from just, cheerleading into a strategically sound investment thesis.
That's a huge boost to credibility. Okay, so moving from that operational execution risk to reason number 2, which is more structural, the nuclear moat.
Right, and if risk management is C-suite thinking, then turning this moat into margin protection, that's pure financial rigor.
The analysis needs to explicitly connect the strategic advantage of ultra-low-cost, zero-carbon power to a quantified differential impact on the company's financial model.
Yes.
And the section on the nuclear moat is compelling. It says TeraWulf owns the plug, that it has this ultra-low-cost, sustainable power while competitors are stuck paying peak rates. It's a fantastic narrative.
It is a great story. But here's the weakness. It establishes the moat as a powerful qualitative differentiator. The ESG factor, calling WLFF the prettiest girl at the dance.
Right.
But it completely fails to translate that advantage into hard financial proof.
The connection between having cheap power and hitting that massive revenue growth or that ambitious $26 price target, it's implied, but it's not backed by any quantifiable margin data.
So the reader is left with a good feeling, but they can't actually run the numbers on that structural advantage. And the whole valuation argument really hinges on this moat being real. How do we fix that? How do we turn that into a real financial argument?
The suggestion is to elevate the whole thing by quantifying the cost advantage. We want to convert this qualitative green story into a structural financial barrier to entry. That directly bolsters the valuation gap argument you get to in Reason 3.
So you're telling the sophisticated reader why the valuation gap exists and why it's going to close.
Exactly.
Okay, so that means putting a real dollar figure on the moat. What are some specific ways the analysis can do that?
Well, for starters, provide an estimate of the dollar per megawatt hour differential. What's the difference between WULF's internal costs from nuclear and hydro and the peak rates competitors are paying? That one simple, hard comparison immediately shows the structural advantage.
And that differential is the leverage point? So how do we tie that leverage back to the whole AI pivot?
It explains where their sustained profit comes from. The analysis has to explicitly show how this cost advantage leads to higher protected gross margins on that HPC revenue from the fluid stack deal. I mean, high-performance computing is intensely power-hungry.
Of course.
So if WULF pays, say, 50% less for that power than the grid average, their profitability per unit of compute is just structurally higher than everyone else's.
So the power cost isn't just an expense line, it's a built-in profit cushion that competitors can't touch.
That's it. And to really hammer the point home, the analysis could briefly introduce the idea of marginal operational cost protection. It would show that even if the market price for AI compute services drops, WULF stays profitable long after its competitors have to shut down because of high electricity costs. That's a true, durable moat. You have to show the math.
That completely transforms reason number 2 from, like you said, a nice story into the core financial engine of the entire bullish case. Much more powerful. Okay, let's move to our third and final high-level critique, which is all about the presentation itself, the delivery.
And this is a critical point on style, because it directly impacts how rigorous and professional the analysis feels.
The highly declarative and sensational rhetorical language should be refined to match the professional quality of the accompanying financial and strategic data.
Yes.
Now, what I really like about this section is the clear presentation of the cold, hard numbers. You've got the plus 87% year-over-year revenue growth, the analyst consensus for a $21 price target. I mean, the data is fundamentally strong. It speaks for itself.
It does, but the weakness is the inconsistency in tone. The material just abruptly shifts between presenting this serious, sophisticated data and then using this emotionally charged hype language.
Yeah, I saw that.
Phrases like screaming, strong buy, sleeping on one of the most explosive pivots, and this dip is a gift. That kind of sensationalism, it risks alienating the very smart money reader you're trying to attract. They're looking for conviction based on rigor, not emotional prompts.
It almost feels like the material doesn't trust its own data enough to just let it stand on its own. It feels the need to shout the thesis, which actually undermines the objective strength of the numbers.
Precisely. So the suggestion is simple. Replace the overly dramatic phrasing with language that conveys confidence based on the fundamentals. We want to maintain that strong bullish intent because the fundamentals justify it, while just significantly improving the perceived seriousness and analytical depth.
So we need phrasing that's just as punchy but grounded in technical or strategic observation. Can you give me a few specific examples of how you'd refine those emotional calls to action?
Certainly. You have to elevate the discussion. So, for instance, instead of saying, "You are sleeping on one of the most explosive pivots," rephrase it to something more measured, but just as confident. Something like, WULF represents a rapidly underpriced opportunity given its strategic shift into high-performance computing infrastructure.
It has the same urgency, just without the hyperbole. And what about turning that emotional observation about the price dip into something more technical?
Yes, that's vital for rigor. Replace "this dip is a gift" with a technical market analysis observation. For example, the recent consolidation phase between 12 and 1250 establishes a clear support level for entry, minimizing downside risk while awaiting the fundamental re-rating.
That's a huge shift.
It is. It makes it clear the conviction comes from technicals and fundamentals, not just a feeling. The tone should reflect the institution that is loading the boat, not the excited person reporting on it.
That is a crucial distinction. The goal is to make the tone match the quality of the data, transforming the piece from just persuasive to, well, undeniable.
Absolutely.